How's the stock market today? It's taking a beating, down 20 points. It's way up. I made $1,000 this afternoon. This sounds like gambling. If you are saving money for some intermediate or long-term goal, you don't want to gamble it away. You want to invest it in some reasonably secure way which will return some interest or dividend profits, as well as your original investment. Try to guess the 5-letter name of an investment that's a share of a company ownership, can be traded in some market, that may pay dividends and increase in value, but also may decrease. Type its name and press Enter. Of course. Hey, did you hear what Joe did? He made a bundle on great microgenetictronics. Too bad about Bob, though. He lost his shirt on midget solar robotics. Compared to savings accounts, how would you describe stocks? Yes. They carry more risk, although the range of long-term risk among stocks of different companies is very wide. Generally, the more risk, the greater the possibility of higher returns. If you are willing to take some risk with a part of your savings, you can consider stocks as an investment, preferably over a longer term. What is special about stock? Yes. Stocks are equity capital, representing ownership and ultimate control of a corporation. Corporations provide limited liability to their owners compared with owning a company as a proprietor. There are two kinds of stock, common and preferred. Common stock normally has the right to vote. Preferred doesn't, but preferred has a prior fixed amount claim on dividends and assets. Besides stock, what's another kind of corporate security? Right. Bonds are debt securities, somewhat like notes, which normally have a due date and a fixed rate of interest. Both private corporations and government agencies can issue bonds. Holders of bonds don't vote on company directors or policies like holders of common stock, but you usually don't wish to run the company, you just wish to get the highest return possible with the lowest risk possible. Besides common stock, what's another kind of stock? Right. Remember, a bond is a debt, and failure to pay its interest is a default which can cause bankruptcy, just as failure to pay other liabilities can. A preferred stock, however, is capital, and failure to pay a specified preferred dividend is not as serious. You may find that a company's common stock is earning or paying 12% of cost, while its preferred pays 10%, and its bonds only 8%. What other 4-letter difference would you expect in these securities? Yes. There are two general kinds of risk. The
business risks that the company will do poorly or fail because of poor management, poor business conditions, or poor financial structure. And the external risks due to general stock market conditions, inflation factors, and interest rates. You can try to evaluate business risks by studying the company's operating reports and measure financial risk by the ratio of debt to equity capital. But you may have to guess at some external factors. What are they? Right. Even if all the risks and returns were known precisely, different persons would make different investments. This, of course, is because we all have different needs. If you're disabled or old and retired, you will take fewer risks in the hope of increasing returns if you might lose your money. But if you're young, have a good job with high-paid skills, you are better able to afford greater risks. And if you make mistakes, you can learn from them. Who may take a chance on genetic video microtechnology stock? Right. There are two general ways to profit from stocks and bonds. First, interest and dividend income. And second, the increase in market price of stock, which may come from company growth or the market price increase of bonds due to drops in market interest rates. You might feel that it doesn't matter whether your investment profits come from income in the form of interest and dividends or from growth in market value, but there are taxable differences. For example, what must you do to investments to realize a profit from market value increase? Yes. There is more risk in making marginal losses when you buy and sell securities than when you hold them for interest or dividend income. Frequent trading in securities is more like gambling and less like investing for steady returns. Over the past 30 years, investments in many common stocks have provided substantial profits due to increases in their stock market trading price. Would you think that IBM bonds have increased in value as much as their shares have since 1950? Right. Most businesses of substantial size are corporations because of liability limitation, certain tax features, possible financing arrangements, and ease of transferring shares of ownership. Corporations issue common stock shares with certificates like this. As a common share owner, you are able to vote for company directors and major corporate changes. You will receive, once a year, a request for your proxy, your assignment of voting rights, to be used by company management at the annual shareholders meeting. If you wish to vote yourself, what would you have to do? Yes. If a company has been making profits, it may pay dividends to its shareholders, usually in cash, but sometimes by issuing stock dividends, extra shares of stock. Cash dividends are paid annually, semi-annually, or quarterly in amounts decided by the directors. If you owned 100 shares of General Motors, you might have paid $50 per share, or $5,000 for them. You might receive a dividend check for $100, $1 a share, even though recent earnings were low or there were losses. What is another kind of dividend? Yes. In a real sense, you are paying dividends to yourself, since your portion of the company is less valuable after you are paid a cash dividend, or your original stock is theoretically worth less after you and the other shareholders are issued extra shares as stock dividends or stock splits. Dividends are a convenient and often understandable way to distribute corporate earnings to shareholders. But you should remember that at present they are taxed twice, once as company income and once as short-term income for shareholders. The value of most things can be expressed in dollars. In the newspaper, you can see the price of 1,000 company shares, the change in the price, and a thing called PE. What would you guess this is? Right. The newspaper also tells how many shares were traded during the day. But you must read company financial reports to find out other information, such as total company earnings, the earnings per share, total company net worth, or book value, net worth per share, and so on. If investing in stocks has risk, there is a small aspect of gambling. Some call gambling a sport, and sports develop jargon. Some stocks, for example, are called blue chip, like GE, or growth, like Tandy, which owns Radio Shack, or income, speculative, cyclical, or defensive. Which would you think Sucker Solar Science Systems, Inc. would be called? Yes. The blue chips are large and stable. Growth may provide capital appreciation. Income pays regular dividends. Speculative are a gamble. Cyclical, like steel and lumber, vary with the economy. Defensive, like some utilities, are counter-cyclical. If you wish to participate more directly in your investments, instead of just putting your money into some managed account, you will eventually adopt some personal way of deciding what stock to buy. You can look at the company and be a fundamentalist at the stock market, or be a technician, or just throw a dart. What TV program does this all sound like? Right. Actually, the day-to-day trading price of a company's shares is of course affected by the company's own financial condition and prospects, and by the condition of the overall stock markets and money markets. Since we live in an open society, you could reasonably assume that all of these things are well known and factored into the current share price. Therefore, you might as well buy or sell at one time as any other, unless you strongly disagree with the market consensus. What would you guess this theory is called? Yes. The three theories are the fundamental theory based on company factors, the technical theory based on market factors, and the efficient markets theory. Nevertheless, a lot of investment experts offer a lot of advice. If you buy the right common stock, you will get excellent returns in dividends or price appreciation. But although since 1950 many stocks have been good investments, political and economic factors in recent years have adversely affected the market as a whole. If you were to do it, what policy would you adopt to profit from common stocks? Yes. Even if you're not a compulsive gambler, you may find great interest as well as possible profit in investing in common stocks. This is especially true if you believe you have special knowledge about a company or the kind of business it is in. In the next program, you will learn something about how to buy and sell securities. You may want to invest in options, commodities, short sales, and straddles, but these are more esoteric. What class of security generally has the most risk and greatest potential profit? Common or preferred stock or bonds? Yes. But some kinds of preferred stock can participate in extra earnings, and other preferred shares may even be converted at your option into common shares. Bonds are also sometimes convertible to common stock. But bonds are debts of the company, designed to be readily bought and sold or negotiable. Interest is usually paid twice a year, and the bonds usually mature in 10 to 20 years after issue. Bonds are usually issued in $1,000 denominations, and recent ones bear 10% to 15% rates. Do you think a $1,000 bond might trade for more or less than $1,000?
Damn it.
Yes. Bonds issued by corporations or by federal, state, or municipal governments may provide tax-exempt income. Especially for high-income investors, they may be desirable investments. For this reason, they bear lower interest rates, and you must calculate their advantage, if any, for your own tax situation. In the next program, you will learn how to buy and sell stocks and bonds.